This week's decision by Treasurer Wayne Swan to wave through the carve-up and sale of the big wealth manager, AXA Asia Pacific, caused hardly a murmur of dissent. But a much tougher takeover decision awaits. Singapore Stock Exchange's bid for the ASX. Now, the $8.4 billion deal represents a 40% premium, so the ASX board and shareholders love it. But it can't go ahead unless Parliament repeals the law that caps individual shareholdings in the ASX at 15%. I spoke to the Singapore Exchange boss Magnus Bocker this week. He was in town drumming up investor support for the merger. Well, Magnus Bocker, pretend I'm Wayne Swan. Why is it in the national interest of Australia for the SGX to take over the ASX?
I think that there's something very important going around in our industry, and that is for many of the listed companies, of Australian listed companies, they will grow, they grow out of Australia, they will become more and more multinational and global companies. They, over time, need to find money for their growth, either in Australia or outside. We, as operators of exchanges, want to follow those companies. For ASX, which is one of the absolutely best exchanges in the world, needs to be given the opportunity to follow a lot of the successful Australian companies around, helping them, and that's what we're trying to do.
But the question is, the ASX is already quite strong. It's efficient, it's strong, it does a good job. The question for Australia is, why does it need to be taken over by Singapore in order to continue doing that job?
I share that. ASX is a fantastic company. If ASX wasn't a good and strong company, I think we would never have a discussion or see how we could be even stronger coming together. If ASX was in a vulnerable position, not weak or didn't do a good job, I think that the interest from Singapore or from any other Asian or other markets will be very low.
But actually, ASX should be taking over the Singapore Stock Exchange.
I think that when we did this...
It's much bigger.
No.
I mean, would the ASX be allowed to take over the SGX?
Absolutely, if the terms were that. But we should remember that in the world we live, there's a reality. The size of the two companies is that in the terms we propose, and prior to we propose the terms, Singapore Exchange was about 65%. And ASX was about 35%. When we put a deal together, we made it much more equal, so it's actually 45-55. And that become, I think, a much more balanced transaction than where we started.
I suppose the problem you have in Australia is that you have a minority government. The crossbenchers are opposed to the merger. So does that mean you really need to get the Liberals on side in order to get it through the Parliament? It won't be enough just to get Wayne Swan and the government.
First and foremost, we are here to try to make the absolute best for the listed companies, for investors in Australia, in Asia Pacific. We, as management for exchanges, we are trying to make that happen. We are trying to create the best possible transaction, which means it needs to be good for everyone. And if we put together something that is very compelling, and I think we have a good support from a lot of the listed companies, from a lot of the investors, I trust that politicians will make the right decision and the right judgment on what we come with.
But who are you spending most of your time trying to persuade?
So far, and we launched this 4 months ago, we have spent a lot of time, and I have had over 300 meetings since we launched this, meeting a lot of investors and shareholders in both our companies, listed companies, both in Singapore listed companies and Australian listed companies, investors, maybe not so many retailers, but a lot of the larger investors, and hearing what do they think about the world of exchanges? What do they expect us to deliver in the years to come? And by that, we have gotten a lot of more insight of the things that we think we need to deliver. So 2 weeks ago, we changed the terms a little bit. We made the difference when it comes to the governance of the new company. We changed the commitments to invest more money into the Australian financial markets. We committed about fees, about clearing, about new products. So we learn, we listen, we hear what's going on, and we act on it.
So how much headway are you making in Canberra?
I have spent no time in Canberra. I am here representing...
So are you talking to the politicians at all about this?
From my perspective, and I'm the CEO of SGX, I've been very clear saying I'm here to describe what's going on in the world of exchanges, what we can do on behalf of the listed companies, on the investors. That's what I'm trying to do. We are, within the next 10 days, we are handing in our FIRB application, the application that makes it possible for us to get into the public position of getting the answer from the political side. So we haven't even done that yet. And I think maybe from my perspective, and I trust my dear friends at ASX, they are spending more time meeting some of the political side, doing their part of it.
Does the announcement this week of the timetable for introduction of competition in Australia by Chi-X make any difference to you?
I think it's, to some extent, do. I think it's a positive sign. I think it's a positive sign that competition is important for the capital markets in Australia. And if it's important, we will have a much better opportunity to combine the businesses of Singapore and Australia.
Okay, so but a lot of people suggest that Singapore doesn't have a lot to teach the ASX about competition because your fees are quite a lot higher, trading fees are quite a lot higher than Australia's. Is that a reasonable thing to say?
I think you're right. The trading fees in Singapore is higher than in Australia. Trading fees in Australia is much higher than in the US. And the fees in Singapore is the lowest in Asia. So we can have a long debate of sort of what is driving what. I think all markets are local when it comes to fees, to the cost of trading and the cost of raising capital. I think that the only way it will go is continues down.
Is it fair to say that your main competitor in Singapore is Hong Kong, and that they're, in terms of getting listings, because I understand that their listings number has increased 12% year on year, and in Singapore it's been flat. And in fact, you have a sales force within your team out there trying to drum up listings for Singapore. Is that correct? And if so, how are you going against Hong Kong? And finally, how does ASX help you in that?
First of all, competition. 55% of the Singapore business is business coming that we compete for outside Singapore. 40% of our listed companies, non-Singaporean listed companies, we compete a lot for our business, and I think we're used to it, and we like that. We like a competitive market because that drives volumes, it drives growth. When it comes to the listing, I think we are actually growing year on year. If you look into last year, we had nearly 40 new listings come into our market, some of those quite significant. We had the largest actually IPO in the real estate market ever in the world that came to the market last year. This year, we will have Hutchinson Whampoa, which is the largest operator of ports in the world, come to Singapore to list the Hong Kong ports and the South China ports. For us, I think that's a significant sign that Singapore is a very attractive market for listings.
So does the ASX assist you in the competition with Hong Kong?
Absolutely.
In what way?
The success is in Australia. There is a very strong mining sector here, which is not some of our strength in Singapore. Bringing that together, I think, will be stronger. The banks here is very, very good in what they do, and they are very attractive for investors. If we can bring them closer to the Asian market, I think it will help us to get new listings in the future.
Now, there are a lot of stock exchange mergers going on at the moment, London and Toronto, Deutsche with NYSE and ASX, SGX, probably. You've been involved in a lot of mergers personally yourself. What is driving all this activity?
We need to help the listed companies, investors, to get easier and cheaper transactions. We need to help the listed companies to raise money cheaper. And it's very hard over time to run one exchange in one country with all the need of technology investments, with competing with investors that go all over the world. We also need to combine our resources to become stronger. And that's what you've seen in Europe. That's what you've seen in the US. And that's what you see in Asia coming now. What we want to do with Singapore and Australia is to try to be ahead of the curve. We are trying to be in a part of the world that is growing. Financial markets in Asia for the next 10 years will probably represent over 50% of the world financial markets. If we can bring these two companies together, playing in a really strong role, I think we have a unique opportunity that we otherwise might lose.
Thanks very much for joining us, Magnus Bocker.
A pleasure to be here. Thank you.